Hello friends, welcome back. This is Rohit Devangan presenting you a double bottom pattern and its screener. It's part of our series that we are presenting on chart patterns. Today's turn is double bottom. As we have understood in the previous one, what is pattern? Pattern is a typical structure which gets formed as a result of various different forces which moves the market, and sometimes it is recognizable like what double bottom is, and some of the other chart patterns that we have like channel patterns, triangle, head and shoulder, triple top bottom, narrow range, wide range, master candle, a lot of other candlestick patterns, and obviously what we are covering today is double bottom chart pattern, right? They are recognizable, and there is a specific or there's a good probability that when such patterns are formed, the market is likely to move in a certain direction, and the idea of using these patterns is to take advantage of that move to make best use of our profit, right? So what is double bottom? Double bottom is a reversal pattern which will see the figure. It is a bullish reversal pattern resembling W, or a lot of other traders or users also call this as a W pattern because it looks like a W formed on a chart, right? So it is a bullish reversal pattern. So basically, let's understand this pattern well. It's not only the double bottom pattern, but there are a lot of other things that if you understand it well, then you'll be able to spot them well in the chart, and you'll be able to make best trade out of it, right? So basically the pattern doesn't start at W, it starts at some point which is much higher than W. So over here the bears have complete control over the system and control over the price, and they continuously bring the price down till a point where there's a lot of demand. Suddenly bulls come in action and they try to pull the market up. But since the bigger trend is so, or the downward trend is so high, that this is where the smart money would come, right? The early entrants would come in the stock, and they think that this is a bargain price, and they lift the price higher. Since the previous trend is so strong, again bears want to take control and they try to bring the price down. But at this time, they are not able to bring down the price beyond the previous retraced level or the bounce back level, right? They try to bring it again, bulls come back here and they try to take advantage because they think that this is a bargain price. They come here and they try to take the stock price higher. In this case, they take the price higher than the previous previous level or previous swing or a small swing high level, and they try take it higher, and then they completely take control, and this is where the smart money is coming, and then weak money comes and takes the market much higher, right? And there's a good amount of profit to be made here. So other things, first is it's a downtrend. If you are familiar with support and resistance, these are very good support levels, so you can use this as purely support level, and this is a small swing high, a sort of a resistance level. Once this is broken, then this becomes support and the market is likely to go higher, right? So another thing to look at is this particular point. Also, along with this, what you normally see is the other things like candle formation or the previous support resistance or other technical indicators signaling certain things. Then it will be a much more added advantage. So this is the typical psychology of this thing: downtrend, stopping at a point, trying to retrace, again bringing down because of the previous momentum, again bouncing back from the same level and taking it higher, right? So it's very easy to understand. If you feel that this is more difficult, don't worry. Good screeners like TopStockResearch, Stock AIO, they have built-in things for you to ready, and you can not only screen this, but you can also do certain backtesting on this, so that you'll have a fairly good idea before you enter in market using these patterns, right? So as we always do with certain basic concepts, we also take you to the screener that we have in the system, right? So over here, if you're familiar with the system, well and good. Otherwise, you go on left hand side. These are all the important pre-created screeners. In the chart pattern, we'll go to popular, and then in the popular pattern, we have double bottom, which is here from 5-minute ticks all the way to monthly tick, right? So daily, weekly, monthly, 5, 10, 15, 1 hour, 2 hour, all the ticks are there. What we'll take today is, or we'll start with, is a double bottom pattern on daily tick. When you click on this, we'll increase the stock basket. we'll see that there are about 7 stocks which are coming in, which out of 500 NSE 500. So which means that about 1.5% of the stocks does give this pattern on any average day, right? Of course, on different days the number of patterns will be different. So it is not it is rare but not impossible. Every day you'll likely to find few patterns out there. Right? So when you look at the chart out here, you see that market is coming down. It's stopping at this level, going higher, then again stopping at level very similar to this level, because the textbooks this thing and the real world can be slightly different. It is retracing almost from the previous level, if you see out here, and then it's going up there, right? So this is a typical double bottom formation. We'll see another example. If you see here, sometimes the pattern looks very obvious, sometimes you have to adjust the chart to make it look better. If you see here, it's coming down, retracing at this level, again coming down, and then retracing at this level, and it's going up. If you see, they have 2 green candles out here with good volume, so its probability is much better, right? So likewise, you have to look at other aspects. Certain patterns are of a slightly longer duration. When you zoom in, you'll see that the pattern, it's coming down. Sort of bottom formation is being started at a little earlier level, and again it stops here, goes up, again it stops here, and then it goes up. Over here, while it's going up, it has very good volume, this thing, right? So that means at this level there's a good amount of demand which suddenly comes in. When stock comes down to this level, there's a strong demand, high volumes, prices going up, again coming down with much lower volume, again going up with much higher volume. That means this would be an extremely good demand zone, right? So if you understand demand and zone, you can look from that perspective. If you understand support resistance, then again this is a very good pattern to be looked at. Right? Similarly, there are a lot of other stocks that you can look at, small term, long term. Both these things are there. This is a very nice pattern, right? It's falling, then going up, again falling and then this level is broken and is likely to go higher, right? With this formation, again over here, if you understand higher high, higher lows, the higher high, higher lows kind of pattern is being formed. You have to see whether if this level gets broken, then it's likely to go to higher to this level or maybe a higher level, right? So this is typical formation of double bottom. As we said, you can look at any other tick. So let's try to look at any tick like a 15-minute tick. Okay, no stock. Okay, so there are about 4 stocks on 15-minute tick in NSE 500. This is one. This is another one. So need to look over here. I saw an interesting thing. One of the interesting thing is when the stock is going down, right? It's going with higher momentum. That means the bears are very convinced. Lot of selling is happening here. So there's with higher volume prices coming down. And then when the second time the volume is coming down, it's coming down with lower volume. That means the bears have started giving up and bulls are getting in a better shape to take it. And if you see, it's going up with a better volume compared to the historical average volume, right? So if you want to draw the volume, then you can draw the volume also out here. That again will be a very interesting thing to see. You can draw 20 days volume chart. So this is a 20 days volume chart. So both these levels, right, where it is going up, it's higher volume. When it is coming down, it's first bottom, where a lot of conviction on the downtrend. Then again, this is there, right? So you can mix other interesting things. Sometimes you may want to mix candlestick pattern. Maybe some interesting pattern is being formed. You see there are a lot of boring candles and suddenly it's going up, right? So wherever market starts, it ends at a higher level, right, with better volume. So that tells a good thing about this particular thing. So that's pretty much about what a typical double bottom pattern is. Next, lot of our users have mentioned, right, once this level is crossed, there's less money to be made. How about if we can get money or if we get this indication before that particular point, right? So what we have done here is we have created another pattern based on your request or demand, which is double bottom potential. What we have done is erase this particular point, and typically the double bottom formation is when this line is broken or breached. Over here in double bottom potential, what we do is, or what we try to do here is, we try to give you indication much before that. So that if you are smart, you understand that this resistance level is an important level. You see some good formation happening over here, then you may be an early entrant to ride this particular wave. Rather than you waiting for this confirmation, you can enter here and move forward. Okay, so let's see what we have in the system. We have a screener for this as well. You see double bottom. Go to double bottom potential. You see that there are about 13 stocks which has a double bottom potential. So when you see here, first bottom is formed, it has gone up, second bottom is formed, and it's trying to go up. So we are giving you an indication much earlier than the typical breach point of this level, right? So what you can do is either you can enter here, or you can set your price level the moment it gets breached. Over here, the indications are looking pretty good. First of all, it's bouncing at this level, which is good level, and then its volume is much better than the volume of the previous days, right? So when you see this has a much better conviction. You try to see some candle thing. So naturally there's good movement out here as well, right? Another pattern, not too great. This one, again, there's a bottom. The level is yet to be breached, but you get this indication much earlier, right? So this is double bottom potential. Again, similar thing, bottom going up, retracing, coming back almost at the same level, and then retracing with good volume. So you can be an early entrant in this world, right? If you go back and see the previous support and resistance level, there can be multiple different things that you can look at, and maybe certain previous levels also can work. So this is about double bottom potential. Let's look at daily tick. Maybe that will give us some better results. Daily tick, we have 10 stocks coming out. So over here it's coming down, retracing at this level, and then you get an indication much earlier than the normal level. You can get a lot of such examples. Over here, double bottom is getting formed, and then you see that it's going with a higher volume. Over here also it went with higher volume, retraced back, still the hangover of the downtrend is there, right? Then again it's going with a higher volume. So possibility of the stock crossing. Let's see if there's a previous support or resistance level. There were some levels very similar to this level in the past where it bounced back. So this should give you a lot better conviction of this particular formation, right? So double bottom potential is yet to be breached, but it's likely to get breached over here, right? And you can wait for a good rally in future. So very similar to double bottom, but it gives you an indication much earlier, right? Now, basically this is something which smart people get in. We have a smarter set of people who have requested us or demanded that we want, this is still too late, we want somewhere at this point, right? Somewhere at this point. So we have created another pattern which we call as double bottom init or initiation. When you see this, we have erased this part. And it comes down, same structure, same thing. They want the moment this get retraced from here, they want this indication, right? So for people who use purely trend lines, support resistance, they see that the base is getting formed and it's likely to go higher, right? So we give indication the moment it's retracing from this level. So let's look at the screener for this one. Screener is double bottom init. Let's go to NSE 500. You see that there are 3 stocks which are coming. Let's see, this is where first bottom gone up, second bottom going up. Not too great an example, again not too great an example. Maybe we change tick to see if something is interesting. 30 minutes, we'll see certain things if something interesting is there. Not too great an example. This one, first bottom is formed, gone up, second bottom formed, and it is retracing, right? It's going up. That's one example. Second example, it has come down, going up. Again, it is retracing back at this level. So you could be a much early entrant because the base is getting formed. You could be much earlier entrant in this. So you can take advantage of 2 things. Number 1 is support line, and second is early double bottom formation, right? Over here, again, there are a lot of examples out here. First bottom going up, second bottom, it's retracing up. Maybe it's likely to take you to a higher level because it's fallen quite badly. So it must be clearly an oversold level around this level. Maybe it is still oversold. Let's look at RSI. It's just above oversold. That level is breached. That's how you can look at a lot of things. Over here, first bottom gone up, second bottom, and it is retracing back. Likewise, you can take advantage of this particular thing, right? Over here, if you see, there's another point here which gives you an indication that these are strong support levels. So it's coming down, gone up, again coming down and trying to retrace. So it's for daredevils to enter here, for some less risk taking traders, maybe they want to wait for a signal or two out here, either in terms of volume or in terms of some other pattern, or maybe some moving averages or some other technical indicators, whatever you trust on, right? So you can start very well with double bottom in it. It's a good indicator. It's a very good indicator. You can take advantage of it, but at the same time, it's little risky because it gives indication much earlier in the game. So it's for somebody who understands chart well, understands other indicator, they can take full advantage of this. Okay. So like what we have for double bottom, is this an exact opposite of that double bottom? Just or let's understand what double bottom is. So double bottom, easy to spot. If you find it difficult, don't worry, go to TSR or Stocky.io. You'll be able to find these patterns easily. It has a good risk reward ratio, right? Generally, it's not only the pattern, but also you have support line, right? Which also tends to give you much better strength in terms of market going down. It's a risk management. You can use stop loss. So you can use the stop loss, let's say, this would be a good stop loss level. So when we go to a particular stock, maybe when you look at this, so this bottom formation would be a good stop loss. And then you as and when it's breaching this level, what you can do is you can put trailing stop loss. We'll create a separate video on trailing stop loss, but if you are familiar with it, well and good. And the target, the minimal target is the difference between this level and this, from this to this level. That is where a lot of our users have said, we want an early intimation of this thing, rather than sometimes what happens is this level is breached and then it takes you to the immediate target level, right? So you may miss the bus. So for that level, this would be a good, this would be a minimal stop loss level, and this, at least the level from this point to the lower point, should be your first target. And then looking at the pattern, in this particular case, like it has dropped from this level, so maybe it's likely to reach to this level. Maybe there was a gap down over here, 30 minutes chart, less likely for a gap down, but let's look at if there was a gap down. Yeah, there was a small gap down out here. So it's likely to fill this gap, right? If this gap gets filled, so it may further take you to higher level. There are a lot of uncertainties around it, a lot of boring candles around this level, right? A lot of boring candles. So which will also help you, not only here, but also here. If you see, there's a day BR out here, a lot of boring candles around here. So you can find a small support and resistance level, first around this level, second around this level, and can take you to up to this level very easily, which will make you a very good risk reward ratio. So use this pattern along with the other concepts that we have in the system. We have screeners for demand supply, we have screeners for trend line, we have a lot of other candlestick screeners. So you can use it to your best advantage. Okay, so basically what we were looking at is good risk reward ratio, identifiable stop loss. You should use this as with like any other indicator. If you get another support or another indication supporting this, well and good. For example, previous support and resistance level for double bottom, excellent this thing, supporting indicator. Good candlestick pattern like a gap up with volume and other things will be good. Another thing that we should have written out here is volume, which we have missed, but don't worry, volume always plays an important role in price action, and particularly when you're looking at potential or in it gives all the more confidence. And you feel free to use other favorite indicators like moving average or MACD or RSI or Ichimoku, whatever you use, continue to use them, right, as a confirmation. So that's pretty much about double bottom. Now we have another indicator or another pattern which we'll cover in greater details, which is double top. We'll cover that in greater details in a separate video. This is a reversal, bearish reversal pattern. It's just opposite of that. In that case it was W, in this case it's M pattern, right? So won't go too deep into it because I don't want video to be long and boring. So straight to the point. So certain points are there, difference between double top and bottom. Generally, people who understand one pattern, they're very easy to relate to the second pattern. We have just mentioned one is formed after uptrend, second is formed after downtrend. The shape is two consecutive peak, two consecutive trough. Price hits at same resistance level, same support level. Breakout leads to downtrend, breakout leads to uptrend, and then it's a breakout below, or breakdown rather, below support level gives you confirmation of the pattern. and then the breakout would give you a confirmation of the pattern, right? Very similar to that. Feel free to use our tool for screening, back testing. You can always go to use backtest to see how reliable this pattern is, how best can you make use of it before you make any real life or a real life trade or use your hard-earned money, right? So practice, practice, practice. That is the key to success. So that's pretty much what we wanted to cover. If you feel that you need any further help or support, you can call on these numbers. That's number one. Or number two is you can also reach out to us using the numbers are also mentioned here for all the premium users. You can use these numbers, or you can request for a demo. We will be happy to arrange one-on-one demo for you. Or if you feel that, like what you have suggested, the double bottom potential or double bottom in it, if you have something more interesting which you think is good, feel free to recommend those things using contact us form. We'll try to implement if we can. Okay, so that's pretty much what I wanted to cover. If you like this video, then please do like, share, subscribe. Such patterns are very difficult to create. More than creation, first of all, it requires lots and lots of analysis, huge amount of CPU power, using a lot of AIs. That's number one. Number two is it requires huge amount of manual testing, right, to test the patterns, quality, reliability. So a lot of hard work is gone in there. If you like it, please do write a point or two in the comments and share with your friends. We would be bringing a lot more interesting patterns. Hopefully we'll bring a rounding bottom and a reverse head and shoulder this week. If things all goes fine, we'll try to bring them, and we'll try to bring more patterns. Like one of our users have a request for Elliott waves. We'll try to get them also. But in this series, what we have is we'll try to cover these patterns, and we'll go into more of harmonic patterns very soon. Hopefully, we'll start harmonic patterns in a couple of weeks. If we succeed in creating those patterns of a certain good quality, we'll publish them as well, right? So till then, goodbye, guys. Thank you for listening to us and supporting us. We'll see you very soon with another interesting pattern, hopefully rounding bottom. Till then, goodbye, guys.